Hey everybody, Boris Lasso BK Force. Welcome to the weekly technicals for Euro dollar, dollar yen, pound dollar, the majors for June 18th to June 22nd, 2018. And of course, the story of the week this week was that Euro crumbled. A very, very dovish guidance by the ECB, completely surprising the market that they're essentially categorically refusing to even consider any possibility of rate hike until a year from now, which creates an ever-widening rate deficit between the US and the Euro, and really makes Euro actually at this point a very formidable carry trade to the short side. Because if you think about the fact that if the Fed continues to just do two more rate hikes before the end of this year, we're talking about 250 against essentially nothing on a carry basis. So short Euro becomes a carry trade at this point, and that in of itself could be an impetus for lower Euro as we go forward. So Euro definitely took a huge hit this week. We saw a little bit of a dead cat bounce at the end of the week, but it really continues to be a sell the rally trade all the way through, both on technicals and fundamentals as we go forward. The levels essentially are now probing the key support at the 115 level, and the resistance now is around 118. So if it comes back up all the way up through the 118, the whole short Euro thesis really comes into doubt. I'm going to let the sirens go by here. But it's very likely, I think, that at least this week, perhaps maybe next week, we're going to want to test this 115. It's not clear if we're going to be able to break it, but I think the impetus to want to run that level, which is such a massive level, certainly going to have a tremendous amount of optionality against it, is going to be very tempting. And that is going to be, in many ways, I think, the big hunt next week as far as traders go in terms of positioning. Dollar yen, on the other hand, I made a mistake here. It should be 112. Dollar yen, on the other hand, is kind of wobbling around this 110 level and really, really needs to push through 111 to kind of take us through this massive resistance level that can then clear the way towards a run towards a 114. So part of the reason why dollar yen has been held back was because interest rates in the U.S. just simply refuse to rally despite very strong U.S. data. This week we have housing data in the U.S., and that should be very interesting to see, because if housing data surprises to the upside, which is something I think the market really doesn't expect, that really puts the final touch to the idea that the U.S. economy is performing better than the rest of the world and should push U.S. rates towards that key 3% level on the 10-year. That, in turn, should push us through 111 on dollar yen and really start the party going as far as that goes. Cable is basically quagmired right now at around the 33, 32 level. It's very difficult to handicap it. We do have the Bank of England this week, but it's very difficult to handicap what's going on because it's really sort of a Brexit-bound kind of a story. We did pass, or Theresa May dodged a bullet this week by getting most of her troops lined up on her pro-Brexit vote, but it's still unclear as we're getting closer and closer to the reality of Brexit, just how much of an impact and just how much of a negotiation UK is going to have. So it's very difficult for me to make any definitive views on cable, although it does look like technically it's sort of coming down to the last exhaustion sells. The relative decline in cable is certainly much lower than the relative decline in euro. And there are some interesting cross trades that I'm considering that I'll share with you in the other video. Let's take a look at the calendar here. See what's going on. The calendar very, very quiet after a very strong calendar last week. The Echo calendar this week really has nothing on it of any import. We have housing data out of the U.S., which will be very interesting to see, just to see if higher rates are having an impact, and if they're not, that's certainly very bullish the dollar. RBA minutes are pretty much going to reaffirm the very neutral stance, and some experts are now even talking about the idea that the next move from the RBA could be down instead of up. Remember, I'll talk about Aussie in just a minute. We'll get to the Aussie in the next video, so let me not divert myself. But speaking of just the pure majors, the big events are housing data on the U.S. side and PMI data out of Germany, which is essentially preliminary data, generally very latest metric of what the conditions are in the ground in Europe, but if they're looking bearish, that should only help us in terms of our negative euro view. So still expansionary, still above the 50, but if we start to kind of eke down to the downside, that could be the catalyst that could push us towards the 115 level as the week progresses. And the Bank of England, which is going to be a non-event because the bank has already pretty much handicap to the market that they're not going to hike rates just yet. But it'll be interesting to see what they have to say, where the vote will be, and whether there's any wiggle room for further tightening. I think the Bank of England is hostage to the UK Brexit story. I don't think they're going to move until they get a good, clear idea of exactly the impact of Brexit on UK economy in general. So looking at the charts here, which are probably the most interesting component this week because we had these massive moves. Here's the weekly. This is the euro. We didn't quite end up on the lows of the week, but it's still a very bearish candle. Certainly blew out the lows from the week prior. Full engulfing candle here. But you can see that we are really making kind of a double bottom here around this 115 level. The low here was what, 1510? The low here was 1543. So we've sort of made a, if you're super contrarian, you could say to yourself, we made a higher low. I'm willing to take a gamble here. And it's if you're a contrarian bet, you could make a gamble here that we kind of trade back up and that we trade against these lows. It's a very small risk here, to take the trade against these lows. But I do think that given all of the negative flow out of the euro and the repositioning by the market, there will be more push to the downside. It can always be surprising. You could always have some negative stuff on the U.S. side with U.S. rates dipping. Let's say if U.S. rates dip below 290, it's certainly going to make the short euro case much less compelling. But if U.S. rates can just kind of inch themselves back up towards 295 to 96, I think we see at least at minimum a test and perhaps even a break of the 115s on the euro. So the euro overall still remains very much in a sell the rally mode, but you have to give yourself massive amount of room here all the way through the 118s to kind of let this trade breathe and float. Dollar yen, on the other hand, looks much better on the weeklies than it does sort of on the dailies. We did end up very much to the highs of the week. We need to clear the 111 level. That's really critical. In fact, the super bullish move would be to clear 111.50 because then it opens up the territory all the way for around towards the 114s. And again, that's a story of U.S. rates as much as anything else, and perhaps any further geopolitical risk. The big problem, of course, with dollar yen is not anything economic, it's political. It's a question of what the Trump administration does next week that could upend everything and everybody. So it's sort of very difficult to trade this because you can't handicap politics. But looking at the price action here, if the price action gives us a clue that we're going to run through the 111s, that gives us a lot more confidence that we have a continuity move all the way towards the 114s. I would say I am kind of on a scale of 1 to 10. I'm like 6.5 bullish on dollar yen, and I would love to be able to be about 7.5, 8 bullish to really want to get long, because certainly it makes a lot of sense here at this point. And cable is just a non-event. We're holding the 132s. Technically, you could say that that as long as we hold this level, it's sort of an interesting bounce level. But honestly, very, very hard to handicap this. Hard to see, what if the Bank of England comes in super dovish and says, just like the ECB, they really don't see themselves hiking rates until the year from now because of the Brexit risk. That could in turn really push us towards the 130 level. So I think we have to pivot off news here. You can't kind of trade pure price action because it's so unpredictable given all the political risk that we have. So that's pretty much how the week shapes up in the majors. We want to be shorting euro into the rallies. Ideally, we'd love to be able to see the dollar yen rally through 111s and get along that trade, and then see what Bank of England has to say in terms of further direction on cable. Wish you guys the best luck, the best trading. Boris Schlossberg, over now.